would have liked to have done this, but unfortunately I had to pay my debt back. So then it was a few years later. It just got to a point where I realised I think it was more the knowledge build up as well. I could have never done this without understanding how the financial system worked and really understanding the industry you're in. I think anyone who wants to start a business that does it in an area they don't know, they're very brave or stupid.
From StepEx, thank you so much for coming on the show. For those who are watching, tell us a little bit more about what StepEx is.
So StepEx started when I wanted to do an MBA, and I really struggled to get the financing for it.
Yeah, because they're expensive.
They're very expensive. It's sort of £50,000, and my parents are sort of hippies from Byron Bay in Australia. Okay. So I didn't have bank and mum and dad to fall back on. Yeah. And in the UK, traditional lenders will only give you money if you already have money. Yeah, it's a bit perverse. So we realised there's got to be a different model. And the high street lenders at the moment are offering about 20 to 25% interest rates, and obviously if you don't get a job straight away, you default, go bankrupt. It's not a great scenario. Yeah. So we thought there's got to be a different model for this. So instead of having the traditional debt where I give you money, you pay £1,200 a month, or you don't get a job and you go bankrupt and you stick coins into an electricity meter for the rest of your life and pay triple the rates, we said we'll give you the money to do your MBA, and we'll take a percentage of your earnings for the next 5 years. You win because you get £5 to £6 million more over your lifetime. Okay. And we can then sell that to investors who win as well and get a return which is above the sort of 1% they're getting from sticking it in the bank.
Did you come up with this whole business idea on your own, or are you in business with anyone?
I did, yeah. We've got a team, and it's definitely a team effort. But yeah, we spent the last 18 months with the regulator in the UK sort of building a framework to allow this new type of credit instrument for people. And we finally, actually 2 weeks ago, got authorised, which was great for us. It was a long time.
How difficult was that to get it authorised?
That was probably the most difficult thing in my life, really? Especially when Brexit was happening at the same time and their bandwidth was stretched. And they were very reluctant to allow this new type of instrument to come into being. One of the biggest difficulties was finding the right lawyers, actually. We went around to about 3 of them, and they all said there's no precedent for this. And we're like, yeah, there's no precedent because it's something new. Yeah. But they don't want to help you do something that's new. They just want to help you do something that's been done before, and they can call it a different name.
So how long did it take in total to actually get it across the line? Because you only got approved, what, about 2 weeks ago, was it?
Yeah, so I think it was just shy of 18 months.
18 months?
Yeah, so a very long time. And there was a lot of pre-work before that.
You had to do a lot of work with lawyers then, obviously, right?
We did, yeah. We got some very good lawyers, Latham and Watkins, actually, in the end, because the sort of smaller firms, they just couldn't do this. And even some of the larger firms, they said, this is impossible, you never do it. So we had to run through quite a few walls to get to where we are now.
So if you're going to the bigger firms, it's obviously costing more money. So
yeah,
that's difficult, especially because you weren't approved until 2 weeks ago. So did that mean you weren't able to make money until now? Yeah,
we weren't able to make any money at all. Okay. So we got very fortunate that the lawyers put us on something called a fast track to IPO, which means you get a discount and you sort of get to defer a lot of the fees and you get partner level support. And that was fantastic for us. But even still, it was very chunky sums for a startup to come up with. Yeah. So we obviously had to raise some funds from people who had faith in the idea, the business and the concept, even though they knew it sort of 12 months down the line before we were even going to make a cent of revenue.
So when it comes to, because we also want to talk about funding today, right? Yeah. So when it comes to raising money, you had raised a seed round.
Yeah.
When did you raise that and how much did you raise?
So we raised £130,000 in about October. Luckily, the first 9 months I self-funded, but we got to the point we needed money for the lawyers, and we also needed money to put in something called regulatory capital for the FCA. So we did that. I always think you have to have something on paper so that people don't just think, it's a great idea, but I could get someone else to do it. So we had to prove that we were the people to do it. So we'd established a pretty formidable board with sort of ex-C-suite bankers, an ex-head of the London Stock Exchange. We were in FCA Innovate. We'd already started this process. We had the lawyers lined up, and we had a sort of blueprint for this is exactly how we're going to do this business. So without that, I don't think there's any chance we'd have got that funding.
You were self-funded up until October?
Yeah.
Is that from personal savings?
That was just from personal savings, which are now completely at zero. So
do you mind me asking what type of monies you started off with that?
So that was about £40,000 for the first year. And
what did you do before actually to get the £40,000?
I ran sales for a consultancy to the banks actually, so it's quite useful to understand how the banks work and also have those contacts.
It's a chunky amount to actually have.
It was chunky, yeah. I wanted to do this far earlier after my MBA, but I was paying £1,200 a month in debt repayment, so it took me sort of 4 years to clear the decks of the debt and get the money to start this up.
Like what? Because like this is one thing that we get asked all the time by any of our followers, because they like, I know we talked off camera about people coming up with ideas, and they've asked you, I want to start a business, do you have any ideas what I can set up, right? They don't genuinely realise that sometimes you need money. You need money
you
saved
need
up,
a lot of money,
like you used 40,000. Like you're taking risk with your money. Like from when you first came up with the idea, right? So like when it was an idea, did you have savings, or did you go, right, this is the idea I want, but I know I'm going to need money, so I need to start saving now? And when you hit 40,000, then you started the company?
No, it was sort of 2013 I came up with the idea, actually. When I wanted to do my MBA, I was a government economist in Australia, and I thought, I want to do an MBA. I don't have any money to do that. How do I do this? And I thought, this makes sense. Like, you can sell equity in your future income and get the money, and it made sense to me, but it just didn't exist.
Yeah.
So then after the MBA, I would have liked to have done this, but unfortunately I had to pay my debt back.
Of course.
So then it was a few years later. It just got to a point where I realised I think it was more the knowledge build up as well. I could have never done this without understanding how the financial system worked and really understanding the industry you're in. I think anyone who wants to start a business that does it in an area they don't know, they're very brave or stupid.
Well, look, you're getting at something that they mightn't know. They're also using money as long as they have it, right? So your money ran out, and then you went for funding, right? Did you know your money was going to run out eventually, and you need to start raising? Yeah. So how long did it take you to close the seed round?
Well, I wanted to raise it in May, but obviously it took quite a few months longer than I expected.
How long did it take?
So we started in April, and I was very optimistic. Like, it's going to be sort of 4 weeks. This is the best idea in the world. Everyone's going to want to pile in.
Yeah.
The reality is, I'm sure everyone thinks that, and it never happens. So it actually took until, I think we closed it in October,
right?
The round. So that's about 4 months on.
140,000 was it?
130.
130. So how did you raise it? Like, how many doors did you go knocking on? How many friends and families' doors did you go knocking on?
Unfortunately, the family it was sort of pounds and cents they would have put in. So
it all adds up.
It would have all added up. But we actually went to some sort of friends and ex contacts from the banks, because they understood the concept the most.
Okay.
And we actually had one of our board members. He really backed the idea a lot, and he's probably put more into this than anyone in terms of shaping the idea and helping us along with it. So he put some money in, and he also brought a friend in who put a lot of money in as well as two sort of former contacts. So another one who's been sort of helping me out from the beginning. So I think it's those people you took on the journey from the very beginning when there's an embryonic idea, and they got excited and they sort of saw how it grew, and they got to the stage where you didn't have to convince them, because they'd already seen the last sort of 6 months of progression. They're like, I want to be a part of this.
What would you say to anyone watching that is thinking of raising, and then they all have the worry of, if I get someone on board, right, I'm giving them equity, right, how much of a say are they going to have in the company? Because you always see the people that are going, oh, I want to hold on to 51% of the company, so I always have to say. So what is your opinion on that? Like, because I don't know what percentage of the company you gave away, you don't need to tell us, but what is your view, and what would you tell anyone watching with the whole, like, don't worry or do worry or make sure you get someone on board? Because there's smart money, you know, getting smart people. It's not just the money you want at the end of the day. You want to bring someone on board who gets what you're doing, wants to come along on the journey and can bring some advice. So what's your thoughts on that? I
think absolutely. Like, all of our investors have helped us. 2 of them in particular have been instrumental to the business, and having them sort of participate in the upside of the business as well is key. I think having people there, you need more people than you can ever have in a startup. Like, you're not rich enough to get people on sort of multi-100,000-pound salaries. The only way you can get them involved is get them invested. So I think you sort of have to think of them as a team member more than anything. So it's almost like not an interview process per se, but you sort of work out, who do I want involved in this company? And then you sort of accept the money. And if you have to give away more for the right person, I think it's definitely worthwhile.
Did you have to turn anyone away? Just going, this isn't the right fit?
Yeah, we had a few conversations where there were some people who sort of wanted to put in very small amounts, and we didn't really feel they were the right fit. But yeah, we had to turn a couple away. It was more sort of you stop replying to their messages, and you just slowly ease it off, rather than you have a sort of very confrontational conversation.
Instead of just saying no.
Yeah, but also all the people I thought would back it from the very beginning didn't really, other than that board member. So you have to be prepared for lots of them to disappear through, like, liquidity issues or something's come up.
I know a lot of people underestimate how difficult it is to raise money, especially when it's a seed round. when they're going for it depends on their point of view on it, right? Someone can have a really successful seed round that closes quite fast, and they expect their next round of funding to happen just as fast, and it can go a lot slower. And then you have people who the first one's gone really slow, and then the next one's a lot easier. You are the only founder. I know you've got a team, but you're the only founder on this. A lot of the companies that we talk to, there's a couple of co-founders where they can turn around and go, right, you're looking after funding, you look after the running of the business. I'll go get the money, and then we'll meet up back in 6 months, you know, and hopefully we'll spend the money on what's needed. You were on your own, right? So how difficult was it for you to run the company and go chasing money, because it took longer than you thought?
It did. It was, and I think that was the two foundation investors who are also on sort of advisory board. They sort of were a bit like founders as well. I also got my brother over from Australia. He's sort of a technology, he's a coder, so he helped a lot, sort of supporting that. But yeah, I think just getting those people in early and finding someone who probably would be a founder, but they got kids and a mortgage, they have a job, or they're sort of retired, but there's another reason they can't do this with you, but they believe in it, they can put money into it, and they're sort of your founder as well. They're not going to do the day-to-day grunt work, but you just need that person when, I always think it's sort of 3 punches that knocks you down. And there's a couple of days that happens, and you sort of call them up and you're like, can we catch up because something's happened, and I just need you there to say, look, it's going to be all right. Shoulder to cry upon.
Was there a ratio that you could break it up between? Because some people say, it's 1 in 10, you know, might invest. At least you know you just need to knock on the 10 doors or the 20 doors or the 30 doors to get your 2 or 3 investors. Was there anything like that for you? Or?
We didn't have anyone say no, but we had quite a few who said like, it's going to be delayed, and just sort of drag it out. And then we had a couple of sort of the last minute liquidity issues. I'd like to participate in the next round instead. Yeah. So I think that's the biggest danger, is people just not wanting to say no to.
They're scared to put their money where the mouth is at times, is it?
I don't know. I think it's just they want to be the sort of second round in. They don't necessarily want to be the first round in. Yeah. The good thing is now, obviously, we've got quite a big pipeline of people who said they want to come in second round once we're regulated, who we're now talking to.
Do you reckon that was because with what you were doing, though, you needed to get regulated and you needed the money to get regulated?
Well, like the lawyers, even the regulator didn't believe we were going to get regulated from
really?
the beginning. Yeah, we got rejected by them twice. And sort of 3 law firms said this is impossible. So it's sort of, I understand why the investors in the beginning thought it was impossible as well. But some stuck with us and believed, and that was good credit to them.
Before we end up, right, I know you're going for another round of funding now. How prepared are you for this one?
I'd say we're a lot more prepared. Part of our business is selling to sort of wealth managers, investment in this, underwriting this product that we have. So we've got sort of big data rooms, all the sort of documents they want, and that in itself was a big learning curve for us. Yeah. The level of detail everyone wants on everything. So we're a lot more prepared from that perspective. I think it's sort of a set formula now where you go into institutions. The more sort of established ones, the first meeting is they just qualify what's your ticket size, what's your time frame, what's your industry market size, and do you understand what you're doing? And if that goes well, then the next meeting is, all right, tell us the details of what you're doing and do we like it? And the third meeting is, let's validate what you said in the last meeting. Yeah. We've sort of, now every corporate and every bank wants to have a venture arm. So we've spoken to a couple of them. They're very new. They're guys probably younger than us even who are running it. And they've just been given a mandate. Look, you don't need to make money. You just have to operate within this corporate's thesis. Okay. And that's been very different for us. And I think if you realise it's not an established investor, you have to very much take them through that process instead. But if you get an established VC, that'll be the format is, first of all, is it even worth continuing this conversation? And then, okay, now what's it about? So that's been interesting to us to sort of learn that process and also identify when someone's a little bit greener to it. And then we have to actually actively ask them, what is your investment mandate? And this is what we're doing.
A lot of the seed money you raised with the 130,000, you were looking to obviously get this regulated and approved. What type of money are you looking to raise now, and what are you looking to spend that on?
So we're looking at over £1 million. Right. Like any traditional raise, about half of that will be for sort of operational costs. For us, a bit different. The other half will be to actually underwrite this product in the beginning. So if there's £1 million worth of students that we'll fund, 800,000 will come from a third party and 200,000 pounds will come from our balance sheet. Yeah. So we've also had discussions. A few VCs have been a bit reluctant about that. They don't want to put your balance sheet into this sort of product. So it's been an interesting curve, and that's why I think the key is just sitting down with them in that first conversation. You don't have time to actually have hundreds of meetings. You have to just get it out of the way and say, this is what we're doing. Does that fit your mandate? Because if no, let's stay friends and walk away, but it's not going to work out.
When do you start looking to raise money?
We started last week.
You started last week? Okay, well look, best of luck with it.
Nah, thank you very much.
You'll come back on the show when you do.
I'd love to, yeah, I'd love to, yeah.
Brilliant. Dan, thanks so much for coming on.
Thank you.
Thanks.